why are these numbers what they are on my tax returns? What can I do in the future that will save me in tax dollars, or what are my strategies for the future? It's that consulting layer that really separates us from the rest.
We caught up with Matthew Kresslein. Matt is a U.S. Navy veteran, a military spouse, and certified public accountant. He shares more about his firm and how they help small businesses. Let's jump right into it. Who is Crestline Carpenter and Kresslein, and what do you guys do?
So Crestline Carpenter, Kresslein, we're a boutique accounting firm. We specialize in income tax for pass-through entities, corporations, and individuals. Most of our target market is the small business community. The firm was actually started about 30 years ago in about 91 or 92 by my dad. Luckily, two of his kids grew up to be CPAs. The Carpenter and Crestline, Carpenter Kresslein, is myself. I'm the last Kresslein. And back in late 2021, I was migrating out of a larger firm, and I was thinking about going out on my own. And I sat down with my dad, talking about, getting some logistical support. And at that time, he was realizing, he's getting older and he needs to start thinking about succession planning. So after about a 2-hour conversation, me, him, and my sister putting our heads together, we came back with, let's develop a partnership to start, putting things together and developing succession planning and growing the firm and keeping it a small family practice.
That's awesome. What kind of services do you guys provide?
Everything from the top to bottom. Most of the clients that we hear from, they've either recently started a business or they're looking to start a business, so they're looking for advice on what entity structure they should use, what things they should be tracking as far as income and expenses, and things they need to be doing along the way to tick and tie and make sure that they're doing all the right stuff. I can't say that everybody comes to us organically and they're coming off the ground. We do get a lot of clients where they have been working with a prior preparer, and either they feel like they're not getting that little level of service that they would like to get. They're getting the preparation service, but they're not getting the consulting layer. They're not getting the advice, or maybe their preparer isn't even qualified to really give advice or, well-tuned enough for it. So we grab up grab up a few screw-ups along the way, and then sometimes, it's just like a lot of the CPAs are retiring now. So they want a younger blood, they want people that are going to be around for a while. Or they just like our business model versus the bigger firms who, they don't know who they're talking to day in and day out. Does that answer the question?
Yeah, absolutely. So who's your target? Do you guys specifically hone in on a certain niche, or are you pretty broad? And then do you stay local, or are you more national, or what's your capacity?
We actually are mostly national. We do have some international clients. You have some expats and people that live outside the U.S. They're usually government contractors, some military. But our primary niche really is the individual people and the small businesses. We're never going to take on the Walmarts of the world or the super huge businesses. We never want to put most of our revenue stream, having it being maxed out at 30-40% of our billing for the year. So we want to stay diversified in the sense that we have a lot of clients that really need help. People that don't want to pay the $500-600 an hour to the larger firms, but our primary target really is the 1040 market with the pass-through entities, whether you're a partnership or an S corporation or a single member LLC, some C corporations. We do have a couple small nonprofits. We're not really super strong in nonprofits, so we try to kind of pair people up with another CPA that might be more well-versed, but it can be in our wheelhouse just depending on what's going on.
Okay.
Yeah. So mostly your small business and pass-throughs.
Cool. What do you think makes you guys different from other firms? Obviously, you're different from the larger ones, but what do you think separates you from some of the other firms out there?
Right now, the biggest thing that separates us is we are family owned and operated. We do not actually have staff at the moment. We're trying to do it that way on purpose. That gives people a direct line to us. They feel like we care. They're not talking to a robot, or they feel like there's some barrier between us and the client, or that we're pawning the client off on somebody else, and that we're not giving that level of attention to anybody. We also enjoy the consulting layer. I mean, let's be honest. I do have plenty of clients that come in, they drop off their tax documents, and they just want me to prep the return, and they want to be out the door, and that's fine. But the part that we really pride ourselves on is, why are these numbers what they are on my tax returns? What can I do in the future that will save me in tax dollars, or what are my strategies for the future? It's that consulting layer that really separates us from the rest. We have plenty of partnerships with, financial advisors, be it the client's financial advisor, and we also have a Rolodex of specific financial advisors we'll pair a client up with to help meet long-term goals. It's not just about getting the return done today and next year. It's really how is what I'm doing today going to affect me 10 years, 20 years, 30 years down the road.
Awesome. What do you think businesses overlook the most when it comes to taxes and accounting?
I think the very first thing that people overlook is their entity structure, how it's really going to be advantageous to them. It's not a one-size-fits-all. I'm not a, hey, start an LLC, hey, start a C corporation, hey, start a S corporation. You've got to really kind of evaluate what kind of market the client is into. Are they going to be in retail? Are they going to be in consulting? What kind of income are they going to be generating? What kind of expenses are they going to be generating? Are they operating from home? And you've really got to look at what they're doing before you give them advice on what type of structure to do. A lot of people go out on Google and they just do the fancy stuff that they're reading on the internet. Because we know everything on the internet is absolutely right and true. The other thing people do that I see often is they incorporate another state that they're operating out of. That's a legal matter, but they end up going to New York by way of California. By the way, I'm on the East Coast, so that kind of makes sense. So the entity structure is probably the biggest thing that I like to try and nail down first, and then from there telling them what they need to track, what expenses can you take advantage of. I always tell a client when it comes to expenses, give me everything. I'd much rather you give me too much than call me a year later and realize we left something off the table. That's really, really my biggest advice, is teaching people how to track and properly document everything after they get the entity structure off the ground. Going further, one entity structure may be 1 year starting out. You may get to years 2, 3, and 4, and that may be the time to make an election to change the type of entity structure that you're involved in, whether it have to be a capitalization issue or how you can take advantage of expenses or basis issues, especially when you're dealing with real estate. So you can't. It's constantly evolving and changing as the business is developing and changing.
That's great advice. What, speaking of the LLCs, S corps, corporations, and stuff like that, can you kind of give a brief overview of what kind of businesses fit in each category there, and why they should be in that category?
Sure, absolutely. So LLCs, to be honest with you, it's more of a legal maneuver. Okay, you can be a single person, you can be a sole proprietor, or you can be an LLC. The LLC is a legal barrier between you and somebody that might sue you, be it a vendor or a customer or something like that. So a lot of people come to me, and you really kind of got to evaluate what the risk of liability is. Between being a sole proprietor and LLC. Sometimes it's not necessary to be an LLC. If you have a super low risk of somebody suing you or doing something silly, I always usually like to start with the LLC. The S corporation, it's a great tax savings maneuver. However, a lot of people, as they're starting out and they're small, it doesn't really fit the category, because with an S corporation, the owner needs to start drawing a salary and running payroll, and there are a lot of administrative burdens and tasks. There's an additional tax return to be done, plus your quarterly filings. You got to do a W-2 and a payroll. And you start adding up all these administrative costs and the accounting fees that topple on that. Hey, listen, I love doing billing. That's how I make my money. But I also don't want to charge a client money to do something that's not necessary. And you don't want to be a penny wise and a pound foolish. That is exactly what I tell everybody, when they start talking as corporation. I want to see how the profits are moving, and does it really sustain all this additional headache for the client and the administrative cost of paying me or some accountant or payroll service. LLCs are also very good for real estate, especially if you're going to be in a partnership. I've seen plenty of real estate acquisitions where it's a group of people coming together, and they say, all right, we're going to do a C corporation or an S corporation. They go out and buy real estate. What they don't realize is they're limiting, which is something called your basis, your debt basis, when there's a mortgage on it, and their ability to take losses. That's one of the areas where I see a lot of goof-ups, where somebody didn't talk to somebody and get the proper consulting along the way when they were doing the acquisition of whatever assets they're doing or whatever operations they're setting up. The other area that when it comes to entity creation, let's just say that you do start a business, and you have an operating piece of it, and you have the real estate. If you watch the movie, what's the movie with Ray Kroc, about the start of McDonald's? McDonald's is not just an operation that's how they made their money. The case study, when you look at it going back to when Ray Kroc launched it, It wasn't just the operating. They went and bought the real estate and they had the operation. When you have a business entity, you don't want to just start your operation and buy a building, buy land, whatever. You want to segregate the two. You want to put your land over here and your operations over there. Why? If something happens in your operations and your customer sues the operation, it makes it harder for them to go after the real estate, and vice versa. Once you start tucking multiple assets under a certain one LLC, you've exposed every single asset to each other. And that's one of the another area that I see that's very weak as far as entity creation. I think I'm getting a little crazy with my explanations here.
No, that's really great advice and a really good example. And I think everybody knows who McDonald's is. So, and that movie is great. So we'll list your website and your social channels, but what's the process to get started with you and Kresslein?
So usually somebody shoots us an email or gives me a call. I do, to kick off, I usually really enjoy talking to somebody a little bit more. It's kind of faster to get through the questions versus ping-ponging over email. I usually do about a 15 to 30 minute initial consultation. I don't charge for it to find out if we're going to be a good fit. What are you doing? Sometimes I give some free advice, whether they use me or not, along the way. And I will be honest, there have been a few engagements where I just don't think it's going to be a good fit. And if I can find somebody that is a better fit for you, I will. And then after that, I usually get a copy of the prior year return. I look it over, find out what's been going on in the past, and then I send them a to-do list of what we need to do going forward. It's very easy. It's not super complex by any stretch of the imagination. It's literally reach out, let's get a call on the books and talk about what's going on.
If you'd like more information on how to work with Matt or to learn more about their firm, click the link in the description below. If you'd like to check out another resource for veteran-owned businesses, check out this video right here, or you may like this video here. Our goal is to keep the military community connected. We appreciate your support, and we'll see you in the next video.